Guys, pay attention. See, I told you that employer making contribution, employer's contribution. Employer's contribution can happen to NPS account also. What is this NPS account? Full form. NPS account as referred under section 80 CCD. 80 CCD. See, what happens now? In this NPS account, this employee will also contribute. This employee will also contribute. This is known as employee's contribution. This is known as, and this contribution will be out of salary, and salary is already taxed. So out of the taxed salary, the contribution is going. No need to give any separate treatment under the head salary. But for this contribution, which is made by employee, the employee will get deduction under section 80 CCD, subsection 1 and 1B. Two deductions he will get. How much deduction? What is the quantum of that deduction? That everything we are going to see in 80 CCD. Yes or no? But first of all, remember, whatever contribution the employee will make, will be out of his taxable salary. For that, separate treatment under salary head is not required, because that will be always out of taxable salary. Yes or no? But for that, the employee is going to get the deduction under, later on, from GTI, he will get the deduction under 80 CCD, subsection 1 and subsection 2. Sorry, 1B. Understanding? Now pay attention. Whatever contribution the employer is making, any amount of contribution made by the employer to the NPS account of the employee. Repeat, any amount of contribution made by the to the NPS account of the, that entire amount is treated as salary under section 17(1). So this year, whatever contribution made by the employer will be treated as your salary for this year. Have you received it? Is it becoming due now? But still it will be taxable under the head salary, because as per section 7, it is deemed to be received under section 7. So NPS contribution by the employer, will be treated as salary for the employee, taxable under the head salary. And for this, additionally, the employee will get the deduction under section 80 CCD subsection 2. So for your contribution out of your salary, own contribution, for that also you get the deduction, and you will get the deduction for employer's contribution also, because that is already considered as your salary. So first consider that as your salary income, and then take it as a deduction under section 80 CCD 2. All the deductions, CCD 2, CCD 1 and 1B, we are going to discuss them later on. But right now, for salary purpose, what are you supposed to remember? Your contribution will be made out of your contribution will be made out of your. For that, no separate treatment under salary head. Later on, we will take the deduction. Yes or no? Your employer's contribution to your NPS. Your employer's contribution to your first effect. Taxable as your salary. Taxable as your. This is the first effect. Yes or no? And the second effect? The amount of employer's contribution which is taxable as your salary. Later on we are going to take the deduction under 80 CCD. Understanding or not? Will you remember this much? NPS contribution done. NPS contribution done. Okay. Now there is one more contribution. See, you might have heard about Agniveer Corpus Fund. Have you heard about Agniveer scheme? What is Agniveer scheme? It is about army, yes. So if you want to get into armed forces, like if you want to get into army, you want to join as a soldier, yes or no? Army, Navy, Air Force. So any of the armed forces, you want to join as a soldier. So earlier what used to happen, you had to give a medical test. Sorry, first of all you have to write a exam. Written exam was there. You crack that written exam, then your medical test will happen. And if you are fit medically, okay, and few necessary paperwork and formalities you complete, immediately you join as a soldier. Permanent employee of the government. Permanent soldier. Understanding or not? Earlier this used to happen. But during the COVID times, this scheme has come. The name of the scheme is Agnipath scheme. What is the name of the scheme? Agnipath scheme. So under the Agnipath scheme, first of all, as a soldier, if you are joining, you have to join under this scheme first. So write your exam, written exam, pass the medical exam, then you will join as a soldier. Then you will join as a, but directly you will not get the permanent employment as a soldier. First you will come in the Agnipath scheme and you will be first treated as Agniveer. First you are going to be treated as Agniveer. Till the time you are Agniveer, you are not a permanent soldier of the government. First 4 years. First, it is just like a probation period. Getting my point? Temporary employment. So first 4 years you will have to prove yourself that you are fit to become a permanent soldier in any of the armed forces. So first 4 years it will be a testing period. During this 4 years what will happen? You will be considered as the employee of the government only because you have joined as a soldier. But you are not joined on a permanent basis. The government has joined you as a Agniveer on a temporary basis. So after 4 years will be over, no, your performance for the 4 years will be evaluated. And if you become fit to be a permanent soldier, then only you will be taken up as a permanent employee, permanent soldier of the government. Getting my point? Till that time you will be considered as Agniveer. Till that time you will be considered as Agniveer and your employment is not permanent, it will be considered as temporary. During this period of 4 years, no, whatever Agniveers have joined, okay, their performance will be evaluated. Out of all of them, 25 to 30% Agniveers will become permanent soldiers. And the remaining Agniveers will not get any permanent employment. They will have to stop their employment there only. Their probation ends. Now they will come out of the scheme. Now they are no more the employee of the government. Their employment goes away because they are not become permanent soldiers. Because out of all the Agniveers, your performance was not up to the mark that you should be taken as a permanent soldier in Army, Navy, Air Force, etc. Getting my point? So, thank you so much for your services for the 4 years. Yes or no? Now you can go and do anything what you want. But don't worry, after 4 years, no, the government has thought a lot about you also. There are many employments, government employments like fire brigade and all, police force and all, where you will be given first preference. Understanding what I am trying to tell you? And after 4 years, no, you will be coming out just like a graduate. Because when you get into this scheme, what happens when you get into this scheme, your age is around 17 and a half or 18 years, max to max. You have just passed your standard 12th exam. And you are 17 and a half or 18 years old. And you are coming into this scheme. So after 4 years, usually what happens, you become a graduate. If you are not getting into the scheme, you will go and take the formal education, you will go to the colleges, you will become a graduate, you will do X, Y, Z, many different things you are going to do. But since you have come to this scheme, okay, You have joined as a soldier. You will be absolutely doing all the things which the soldier does. But along with that, your graduation degree will also come. 4 years formal education will also be completed. After 4 years, you will be a complete package coming out of this scheme. Meaning you will be a disciplined person. You will be having all the, features which the soldier has. You will be one step ahead of the normal youth, which usually don't come in this scheme. You will have all the fighting techniques which you might have learned as a soldier, yes or no? And even after coming out of this scheme, you will be one step ahead from all the other youth who normally does not come in this scheme. And on top of that, what will happen? These 4 years, you are working as a soldier, so you will be earning salary also. And for these 4 years, there will be a separate corpus fund which will be maintained for you. It is just like a provident fund, but it is known as corpus fund. And what is the name of this corpus fund? Agniveer corpus fund. What is the name of this corpus fund? This corpus fund is made for the benefit of Agniveers who are going to leave after 4 years, who are not coming in the permanent employment. So for 4 years, first 4 years of your employment, what will happen? The government is going to pay you salary. The government is going to pay you salary. Out of that salary, some amount will be deducted as your contribution, which will go in this fund. So meaning that, can I say this person is an Agniveer? Hello? Agniveer means employee, soldier of the central government, but he is not on a permanent basis. Hence he is known as what? Agniveer. So whatever salary the central government is going to give, hello, out of that salary, what did I say? Out of that salary, some amount will be deducted as what? Contribution of the Agniveer to this corpus fund. So this is employee's own contribution, Agniveer's own contribution out of his salary to the Agniveer corpus fund. Just like a PF contribution which happens from your salary, this is also a contribution which will happen out of your salary. But this contribution will go to your Agniveer corpus fund. Now tell me, if your salary is 10,000 rupees, how much? So how much contribution will be deducted? Usually 30% of your salary. Usually 30% of your salary. I'm just taking an example, 10,000. The salary can be a different amount also. Yes or no? I'm just taking an example. So if your salary is 10,000, you will not get full 10,000 in your hands. Usually 30%, approximately 30% of your salary gets deducted. And can I say 3,000 rupees will be deducted? And that will go to your Agniveer corpus fund. So how much salary you receive in your hands? But how much is your salary? So under the head salary, how much salary you are going to show? In that 10,000, this 3,000 is already considered. No need to give any separate treatment. Under the head salary. Understanding or not? And for this contribution which you have made to your Agniveer corpus fund, this is known as employee's own contribution to his Agniveer corpus fund. For this, he is going to get deduction under section 80CCH, subsection 1. Under which section? Okay. Now just like you, your employer will also contribute here. Who is your employer? Government. So your employer will also contribute. Number one, whatever contribution your employer is making to your Agniveer corpus fund will also be treated as your salary. 17 subsection 1. This will also be treated as your salary. And it will be taxable under the head salary. First effect. And second effect, for this amount, you will additionally get a deduction under section 80CCH subsection 2. So first it will be taxable under the head income from salary, employer's contribution to your Agniveer corpus fund. And for that, later on you are going to get the deduction under 80CCH subsection 2. So for the salary purpose, what you are supposed to remember? Your contribution to your Agniveer corpus fund is always out of your taxable salary. No separate effect should be given under the head salary. Later on we are going to take the deduction from GTI. From GTI. And your employer can also contribute. Your employer can also contribute, meaning the government will also contribute to your Agnivir Corpus Fund. First effect. First, it will be treated as your salary, taxable under the salary head. And second effect, later on we are going to take the deduction under 80 CCH, subsection 2 from the GTI. How much deduction will be available, how much deduction will be available, that we are going to see later on. Usually full amount is allowed as a deduction. Understanding or not? Hello? So, this is the end of your salary chapter. Now pay attention. Do you remember that we had discussed about the definition of salary? Can you see the term salary ordinarily means any sum by whatever name called given by the employer to the employee, whether in cash or in kind. Yes or no? Will be treated as your salary. It will be taxable on due or receipt, whichever is. But the term salary does not mean only this much. The term salary also includes, because these amounts are also be treated as your salary and should be taxable under this head only. So 17 subsection 1. 17 subsection defines what? Salary. To include, number 1, wages is your salary. Yes or no? Annuity or pension. Then using the phone, no? Pay attention. Then after gratuity, then fees, commission, perquisite, profit in lieu of. Have we done the perquisites? Under section 17 subsection 2, clause 1 to clause 8, all the perquisites which are given in 17.2, we have already covered. Now only this part is remaining, only profit in lieu of salary. 2 minutes this will be over and the chapter is done. All the theory will be done. But remember, this is salary, this is salary, this is salary, this is salary. So this is taxable under this head. Apart from that, advance salary is also taxable. Then leave encashment is also taxable. Today I told you one thing. These 4 points I did not discuss earlier. I told you that these 4 points I will discuss later on. Today I have discussed all these 4 points. Employer's contribution to your RPF in excess of, it is your salary. Any interest credited to your RPF account over and above 9.5%. That excess interest is also your, read point number G. Employer's contribution during the, to the RPF account of the employee in excess of 12% of employee's salary, and interest credited during the previous year to the RPF account of the employee in excess of 9.5% rate of interest. Even this excess contribution and excess interest credited will be treated as your salary and will be taxable in this year only, because as per section 7 it is deemed to be received. Understanding or not? Next one, transferred balance in RPF account being, wait, UPF balance. Approval is given, recognition is given. So UPF balance will now be transferred to RPF. UPF balance will be converted into RPF. This balance which is getting converted into RPF is known as what? Transferred balance. Is known as, in this transferred balance also, employer's contribution will be there in excess of 12% for these many years. In this transferred balance also, interest credited will be there in excess of 9.5%. So whatever employer's contribution for these many years in excess of 12%, whatever interest credited for these many years over and above 9.5%, which is contained in that transferred balance, even that will be treated as your salary. Point number H. Then point number I. any amount contributed by your employer, any amount to your NPS account will also be treated as your salary. And just now I told 2 minutes back, any amount contributed by your employer to your Agniveer Corpus Fund account will also be treated as your salary. If I would have taught you these things earlier, you would not have understood anything. That's why I kept these 4 points pending. And now the definition of salary is over. Now in this definition, whatever is salary, I have already explained everything. Yes or no? If you see any of these things, where you are going to charge them? Salary head, because all these things are treated as salary. Understanding? Sure, sir. Now, can you see profit in lieu of salary is also salary? Profit in lieu of salary is also, what is profit in lieu of salary? Employer is not giving you salary, but in lieu of that salary, some profit is happening from employer. So you are an employee. You are supposed to get a salary from me. But instead of giving you that salary, I am giving you some amounts. I am giving you some profits. So that profit which is happening in lieu of salary, profit which is happening in lieu of is also your salary. Because if I would not have given that amount as profit, I would have given that amount as salary. Best example I'll give you. I am giving you some award. You are my employee. Annual function is there. In the annual function, I am giving you best employee award. Best employee award, which is very hard to believe, but still. Hello, best employee award. Will I give you some flowers, shawl, and a small token amount of 2 lakh rupees? What? So that is in flowers, no? I'm giving you flowers. Then, so function is happening in the organization. Best employee award is given to you. Will you get only flowers? Will you get only shawl? Or you will get some amount also? That amount which I am giving you as an award is what? I should have given this amount as salary. But in lieu of salary, this amount is given as what? Award. This is what? Profit in lieu of salary. Do you remember UPF balance? Lump sum balance from UPF. So in that lump sum, whatever employer's contribution was there, whatever interest was there on that employer's contribution is also a profit which is given in lieu of salary. Getting my point? Your employment is terminated. So after the termination of your employment, will I give you some amount? So that amount is given after, usually I don't give, but will I give you some amount in the form of compensation because your employment got terminated? So after the termination of your employment, I should have given you salary, but instead of that salary, I can give you some amount after your employment gets over in the form of compensation, etc. What is that? That is a profit in lieu of salary. You are joining me. Before joining only, I am giving you some joining bonus. I could have given that amount as a salary after you join. But before even joining, I am giving you some amount as what? Profit, which is in lieu of salary. So all the payments which are given to the employee by the employer, rather it should have been given as salary, but it is not given in the form of salary. It is given otherwise, in any other forms. So those amounts which are given as profits, those are given in lieu of salary, will also be taxable under this head because they are coming from employer. Whether those amounts are given before joining the employment or those amounts are given after the cessation of employment, it can be given at any time during your service also. Understanding? All those amounts are treated as profit in lieu of salary. So now we are going to see what are profits in lieu of salary. Entire discussion I have done, each and everything I have explained. Now if you will not remember all these things, friends, it is your mistake. I don't have to do anything with that. It is your mistake now because you don't remember the things. Now see, who is this? Employer or giving what? To the, for, or modification in terms and condition of. This is known as profit in lieu of salary, which is nothing but your salary only. As per 17(1), it will be taxable under the head salary. And believe it or not, I have already explained this entire point while I was discussing retrenchment compensation with you. So with retrenchment compensation, there was a note in the retrenchment compensation point. That note was for this only. If you have notes, you can check it. Check. In the notes only, I have already discussed this along with retrenchment. Am I throwing you out? Yes. If I am throwing many employees out, that means retrenchment. But if only one employee is thrown out, meaning it is not a retrenchment, the employment is terminated or terms of the contract are modified. And for that, if any compensation is given, that compensation is not retrenchment compensation, that is profit in lieu of salary, fully taxable. Hello, sir. Did you see that? Did you check that? Did you find it? It will be a note below that retrenchment compensation. So I have again written that as a profit in lieu of salary here in 17(3). Hello, employer or former employer is giving you any payment from provident fund or other fund. See, this payment I would have given you directly. But instead of giving you this payment directly as salary, I am putting this amount in the provident fund, and now from provident fund this amount is coming to you. Ultimately the amount is coming from my pocket only, no? So any amount is given by the employer through provident fund or other funds to the employee to the extent of employer's contribution and interest thereon. That is the reason why UPF lump sum we divided into 4 parts. If you remember, employee's contribution coming back, ignore. Interest on employee's contribution, taxable under IFOS. What about employer's contribution and interest on employer's contribution? Taxable under the head salary, because it was profit in lieu of salary. Point number 2. Hello, sir. Hello. Example, payment from UPF, accumulated balance to the extent of employer's contribution and interest discussed with the concept of provident fund. Yes or no? Now, note, following payment shall not be treated as profit in lieu of salary. Payment coming in the name of gratuity, which is exempted under section 1010. Don't consider this amount as profit in lieu of salary because this is exempt under 1010. Amount coming as pension, which is exempt under section 1010A. Retrenchment compensation, which is exempted under section 1010B. Payment from SPF or PPF, exempted under section 1011. Payment coming from RPF, which is exempted under section 1012. Payment from approved superannuation fund, which is exempted under section 1013. Any HRA, which is exempted under section 1013A. These amounts are exempted under these sections. So don't consider these amounts which are exempt under these sections as your profit in lieu of salary. You are supposed to consider only the taxable amounts. And what is the taxable amount? Any amount coming from any provident fund or other fund. Any amount coming from any provident fund or other fund which was given by the employer as employer's contribution or any interest thereon also will be treated as your profit in lieu of salary. But these amounts will not be treated as your profit in lieu of salary because these amounts are exempt. Because these amounts are exempt. Will you remember this? Hello, sir. Next one. Now some insurance company is giving any sum, including bonus. So you are getting some amount from the insurance company. Are you getting some amount from the insurance company? Hello? You are an employee. You are getting some amount from the insurance company, but that amount is coming under a Keyman insurance policy. Which policy? Now we are going to discuss about this Keyman insurance policy in detail when we are going to do the income from other sources topic. Which topic? That time you will get a clear and proper idea about this point. So right now just understand this much only. If you are an employee, and you are receiving an amount from the insurance company under the Keyman insurance policy. Which policy? So you are an employee, you are a Keyman also. You are a Keyman also, but as a Keyman, your insurance was taken by your employer. Now that insurance money is not going to the employer, that insurance money is coming to you. So your employer has made these arrangements with the insurance company that the amount should not come to the employer, rather the amount should go to my employee. Understanding? So you are getting this amount from the insurance company, not your employer, but this amount is coming because of your employer only. Because employer would have taken this policy for you. So if you are an employee getting any amount from insurance company under normal life insurance policy, medical policy, no, under a Keyman insurance policy. So whenever you are going to get any amount from Keyman insurance policy, including bonus, etc., whatever amount is coming to you, that amount will also be treated as your profit in lieu of salary. Detailed discussion about this point will happen under the head IFOS, and this same amount is going to come in the next chapter also, PGBP. Same thing you will see under the head PGBP. At that time I will be speaking that amount coming from Keyman insurance policy will be taxable under the head PGBP. That time you will confuse. Sir, you said that this amount will be taxable under the head salary, but now you are saying that this amount will be taxable under the head PGBP. That same amount will come in the IFOS also. That time I will say that this same amount will be taxable under the head IFOS. Third time you will get confused. So all the three confusions will be cleared in the IFOS. Either the amount will be taxable under this head, then it will not be taxable under PGBP, will not be taxable under IFOS. Or the amount will be taxable under the head PGBP, then it will not be taxable under salary, it will not be taxable under IFOS, then it will be taxable under the head PGBP. But if it is not getting taxable under salary also, if it is not getting taxable under PGBP also, then this amount will be taxable under the head IFOS. When this will happen, when to tax this amount under salary, when to tax this amount under PGBP, when it will be taxable under the head IFOS, what is Keyman insurance policy, each and every discussion will happen with IFOS. So right now, just remember this much, that amount coming from Keyman insurance policy to the employee, can be taxable for him under the head salary as profit in lieu of salary also. Yes or no? Next one. Employer is giving to the, before joining the employment or after joining the, yes or no, will be treated as, even after the employment is over, then also any amount coming from the employer or former employer can also be treated as profit in lieu of salary. Getting my point? So this 4 points you are supposed to remember. Will you remember these 4 points? Yes or no? Sure, sir. Now let's discuss about relief. Now before discussing about the relief, what are we going to do? We are going to solve few questions. Now how many questions are remaining? Come to illustration number 6. Till 5, everything is done now? Till 5, everything is done, guys. Come to illustration number 6. Very difficult, huh? Very difficult. Should I read? In the break time, no, you speak a lot. But I don't know what happens after the lecture starts. You don't talk only. Yes, no, okay sir, no problem sir, we are understanding sir. Okay, I have to assume everything. So if you are understanding, tell me yes. Not understanding, raise your hands, ask me the question. If I'm asking you, should I start the question, tell me yes or no. No sir, we don't want to do the question. You can at least say that, no? No sir, we don't want to do the question, so deemed to be done. You want to do this question? So keep answering me. Okay, Mr. A retires from service on 31st December 2025, which is your previous year, guys. So during your previous year, Mr. A is retiring on 31st December after 25 years of service. Ayyo. After 25 years of service. Okay. Following are the particulars of his incomes, investments for the previous year 25, 26. So is he getting a basic salary of 16,000 per month? For how many months he is going to get it? Why 9 months? April to December. 9 months only he is in employment. So for 9 months only he is going to get what? Basic salary. So how much basic salary? 16,000 into 9. What will be the tax treatment? Come on, tell me. This year, whatever basic salary you are getting from your employer, what will be the tax treatment of that? Will it be exempt? Will it be taxable? If taxable, under which head? IFOS, PGBP. What will be the tax treatment, guys? IFOS, no? IFS. Salary. Taxable or exempt? So T for taxable. Under the head salary. Now this employee is also getting dearness pay, dearness allowance. 50% forms part of 8,000 per month. 8,000 into 9. 72,000 DA. And out of that 72,000, 50% in terms. So balance 50% not in terms. So 36,000 in terms, 36,000 not in terms. What are you going to do? 36 in terms also taxable, 36 not in terms also taxable. Can I say entire 72,000 taxable? Under the head salary. Very good. Lump sum payment. Now this is important. This year when you retire, so at the time of retirement you are getting lump sum payment from UPF. How much lump sum payment you are going to get? Now see, lump sum is coming from RPF, SPF or UPF? UPF lump sum, how much you are getting? Will it be exempt or it will be taxable? Taxable in how many parts? So out of this lump sum, employee's contribution will be there. What will you do? Ignore. Out of this lump sum, interest on employee's contribution, taxable. Under the head salary, no? IFOS. Out of this lump sum, employer's contribution and interest on employer's contribution, this will be profit in lieu of salary, taxable under the head salary. So this year under the head salary, this entire 6 lakh will be taxable, no? Then out of this 6 lakh, employer's contribution and interest on employer's contribution will only be taxable under the head salary. Interest on employee's contribution will go to IFOS, income from other sources. Now how much is employee's contribution? How much is interest on employee's contribution? They have given you the breakup below the table. Please check. Out of the amount received from UPF, they are talking about the 6 lakh. Yes or no? Employer's contribution is how much? Don't you think that this 2,20,000 will be taxable under the head IFOS? Yes, IFOS. IFOS. I said speak with me, say yes or no, but don't speak like that. Listen to me and then only speak, no? This employer's contribution will be taxable as profit in lieu of salary under the head salary. Then interest thereon means this interest is interest on employer's contribution. Don't you think that this will also be taxable? Under the head salary. Salary. Now, employee's contribution was IGNORE. Ignore. So out of 6 lakh, 2,70,000 will be ignored. On this 2,70,000, how much interest was there? This will also be taxable, but it will be taxable under the head IFOS. Understood? So on your calculator, if you add 2,20,000 plus 50 plus 2,70,000 plus 60, you will get a total of 6 lakhs. That breakup of 6 lakh is given like this. Yes or no? Always this type of breakup will be given in the question. You have to identify the amount and you will have to charge that amount under the correct head. Will you be able to do it? Yes or no? Now deposit in PPF account. See, which account is this? PPF account. Which account is this? Full form of PPF is? Now public provident fund is different. Employees provident fund is different. Now pay attention here, everyone. Two types of accounts. One, employees provident fund, which can be SPF also, which can be RPF also, and which can be UPF also. Yes or no? Now if I talk about employees provident fund, this will be created for employees by the employer. All the discussion about these provident funds we have already done. But there is one more type of provident fund which is made by the central government for general public. And that provident fund is known as public provident fund. Now, this public provident fund is made by whom? By central government. If you want general public, anyone wants, they can contribute in this public provident fund also. Employers are not compulsorily required to contribute here. So your employers will never contribute in PPF. Who will contribute? If you want, you can contribute. So along with your employees provident fund, extra contribution you can do in the PPF also. But there your employer is not going to contribute because there is no statutory obligation on your employer to contribute in PPF account for you. Statutory obligation is only for employees provident fund. He will contribute only in your employees provident fund. He is not going to contribute in public provident fund. And wait. Even if you are not an employee, even if you are not you are a self-employed individual, still you can contribute in public provident fund. So in public provident fund, what will happen? Every year some amount will be deposited. So if you want, you can open a PPF account. Where you can open this PPF account? You can go to any post office or you can go to any nationalized bank like SBI and all. Yes or no? Go and tell them that I want to open a PPF account. Which account? So they will give you a form. PPF account opening form. Fill up that form. Your PPF account will be opened in the bank. But that account is with government. Understanding? Now this account will mature after 15 years. How many years? This is very important to remember. That whatever money you will deposit every year, see, minimum 500 per annum you have to deposit to keep the account active. And maximum deposit in a year can be 1,50,000 in one account. Understanding what I am trying to tell you? So if you open this account, what is the requirement? This account will be opened and will be matured after 15 years. From the date of opening till 15 years, you will have to maintain this account. Understanding? And every year, minimum 500 you have to deposit. 500 rupees minimum you have to deposit in this account. Only then this account will be active, will remain active. Maximum contribution in one account, how much you can make? 1,50,000. This is government rules which I am telling you. Yes or no? Now whatever deposits which you are making in this account, no? Forget about this money. You are not going to get that money back. You are going to get that money back after 15 years. So deposit only that amount which you don't want for the next 15 years. Huh? Before that, you will not be able to withdraw that money because this deposit is for 15 years. So first year, deposit some money. Second year, deposit some money. Third year, deposit some money. And every year, whatever amount will be deposited, whatever amount will be deposited will be allowed as a deduction under ATC. So amount deposited in this year will be allowed as a deduction in this year under section ATC. Next year, whatever amount you will deposit, next year it will be allowed under section ATC. Next to next year, whatever amount you will deposit, that will be allowed in that year under section ATC. So every year, whatever amount you are going to deposit, that amount we are going to allow you as a deduction under section ATC. And this deposits you can do for 15 years. Every year, some interest will be credited. Some interest will be credited in your account. Earlier, the rate of interest, when this scheme was brought, no, in the beginning, the interest rate was above 9%. When this new scheme, when this scheme came for the first time, that time the interest rate was more than 9%. Slowly and gradually, this scheme became popular, and the government reduced the rate of interest. Right now, the rate is somewhere in the range of 8.7 or something like that, 8.5 to 8.7. But still, it is better than your normal deposit accounts in the bank. Because on savings deposit, you usually get how much? 3%, 4% interest. It is still better than those accounts. And if you want to do serious savings, this is the best account which you can open. 15 years, keep on saving some money, slowly, gradually, slowly, gradually. Every year some amount will be deposited, and on the total deposit, including the interest which get credited, interest gets what? Accumulated. Understanding? Accumulated. And after 15 years, whatever amount remains in your PPF, lump sum amount, which will be deposits for so many years, and interest which gets credited every year. Yes or no? Whatever deposit you will make every year will be allowed as a deduction every year under section ATC. Every year interest will be credited, that interest will be fully exempt under section 10(11). So this year interest credited will be fully exempt under section 10(11). Next year whatever interest will be credited will be fully exempt next year under section 10(11). Every year whatever interest will be credited, that interest will be fully exempt. Will you remember this? And now after 15 years, a decent amount will be accumulated in your PPF account. That amount will be coming out as lump sum. And that entire lump sum will also be fully exempt under section 10 subsection 11. Will you remember this tax treatment? Hello? I'm not going to discuss this in section ATC now, because I have discussed this entire point here. Understanding? So now tell me, this year you are depositing amount. Read the question. Read the question. What is this? In how much? So this year you are depositing 40,000 in your, is it your income or it is a payment? It is a deposit. Money is going out. The money is being deposited. Money is being invested in PPF account. For that, this year, what will happen? Whatever amount you have deposited in this year, for that, what will be the tax treatment? I've just now told you, see, 40,000 deposited in this year in the PPF account. What are you going to do? You are going to take the deduction under section ATC. Common sense. Hello? Will you remember? So tell me, for this deposit, 40,000, what are you going to do? Deduction under section ATC. Deduction under section ATC. Understood, no? Now what are they saying? What is the taxable portion of the amount received from unrecognized provident fund in the hands of Mr. A? they have given you this entire question and they are asking only one thing. They have given you all the possible different things, but they are asking you about only one thing. What will be the tax statement of this 6 lakh? That's it. But if I was your examiner, what I would have asked you? What will be your total income? So write down in their question only. Write down. Also calculate the total income based on the above details. Also calculate the total income based on the above details, assuming 115 BSc tick mark, 115 BSc cross mark. Under both the regimes. Yes or no? So come on. Shall we calculate the total income? Tell me the name of the assessee. Mr. A. Mr. A is a company, no? Or individual? Individual. R-O-R. Pan dash. What is the previous year? 25, 26. What is the assessment year? 26, 27. Now what are they telling you to compute? In the question, they are telling you what will be the tax treatment of that UPF balance. That you already know, na? That we have already discussed. But from that question, I am teaching you that how to compute the total income. If they would have asked you to calculate the total income, how you would have calculated that? Yes or no? So, computation of what? In the bracket, no. Write down one thing. What you will write? You are computing the total income, assuming that the assessee is not following 115 BSc. Meaning assessee is in default scheme or optional scheme? Optional scheme. Not following 115 BSc. Done, sir? Now, particulars. Then, 2 columns for rupees. Done, no? What are you going to do now? Come on, tell me. To calculate your total income, what is the steps? What are the steps to calculate your total income? First, you will have to calculate 5 heads income, then clubbing, set off, you will get gross total income. From that, you are going to take chapter 6 head deduction. So that process you are supposed to follow. Yes or no? So, you are supposed to calculate the income of 5 heads. So in the question, 5 heads are not there, but 2 heads are there. First, salary head is there. Second, IFOS head is there. Yes or no? So first of all, you are going to calculate income under which head? Income under the head. Income under the head. Salaries. So tell me, first thing, basic salary. How much? Which column should I write it? No, first column. Why? Because the total of salary head will go in the outer column. Done, no? So first column I will write 1,44,000. This is the salary which is getting taxable, basic salary. Then dearness allowance. We'll split the dearness allowance over here because 50% is in terms and 50% is not in terms. So in terms is how much? 50% of 72,000. And not in terms, same. Not in terms is how much? 50% of 72,000. Yes or no, sir? So this 36,000 will also be taxable and remaining 36,000 will also be taxable. In short, full 72,000 will be taxable. Apart from basic salary and dearness allowance, what other thing he is getting? Lump sum payment from UPF. Yes or no? Wait. Lump sum from UPF on retirement. Entire lump sum you are going to take here, or only to the extent of employer's contribution and interest thereon? So lump sum payment from UPF on retirement to the extent of what? Employer's contribution and interest on employer's contribution. How much? Employer's contribution is how much, guys? 2,20,000 and interest thereon 50,000. So total lump sum will be taxable, will be how much? 2,70,000. Entire 6 lakh will not be taxable, only 270. But wait, out of that lump sum, some amount will also go to IFOS. Hello, sir. That we are going to write down later on. Out of that lump sum, some amount we are ignoring. For that you are supposed to write a note that lump sum will not be taxable under any head, because that lump sum is not treated as income only. Employee's contribution. Yes or no? Any other amount under the head salary? Any other amount under the head salary? Yes or no? No. So what are you going to do? Total. 2,70,000 plus 72,000 plus 1,44,000. 4 lakh. This will be treated as what? Gross taxable what? Salary. Done, sir. Out of the gross taxable salary, will you get any deduction? Under section? Deduction under section 16 clause 1A. That is what? Standard deduction. At the rate of 30%, no? Of NAV. Flat 50,000. Sure. Any other deduction? 16 clause 2, entertainment allowance, 16 clause 3, professional tax, no deduction? Total. Color, blue color. 4,36,000. Directly outer column. Why I have written this directly outer column? Because this is the taxable income of salary head. So taxable income of salary head in the outer column. Yes or no? 4,36,000. So to calculate my total income, my salary head is 4,36,000. Now I will have to calculate house property. Details of house property given, no? House property income is given, no? Nil. No need to write. PGBP I will calculate. Details of PGBP given, no? PGBP calculated and given, no? Not given. Nil. Capital gain. Nil. IFOS will be there. So the next head will be again color, blue color. Income. Under the head, other sources. So under the head other sources, only one income is there. What is there? Interest on employees' contribution to UPF received as a part of what? Lump sum on retirement. So interest on employees' contribution, which is received as a part of lump sum on retirement. So in that lump sum, whatever interest is there on employees' contribution, that will be taxable under the head IFOS. How much? Directly outer column, color, blue color. That is the total of my IFOS head also. Because this is the only income under the head IFOS. So IFOS head total will be 60,000 only. So I will directly go and write down that amount in the outer column. All the 5 heads are done. 3 heads are nil. 2 heads giving me income. Now I will total. Do the total. 4 lakh. This 4,96,000 will be your gross total income. Yes or no? Out of this gross total income, are you going to get any deduction? Deductions under chapter 6A. Any deductions of chapter 6A? Have you identified? ATC. ATC. What amount you are claiming under ATC? What amount you are claiming under ATC? Deposit. Deposit in PPF account. That you are claiming under section ATC. And remember, that amount first you write down. How much? 40,000, no? Inner column you are going to write down. Why? Because the total deduction available under ATC cannot be more than 1,50,000. So the overall limit under ATC is how much? 1,50,000. So whatever payments you are claiming under ATC, the total of that cannot be more than 1,50,000. So maximum limit is how much? ATC. Maximum limit is how much? 1,50,000. So that 1,50,000 you are supposed to write. If the amount is within the limit of 1,50,000, it will be fully allowed. So this or this, whichever is lower. So how much will be the total deduction? Come on, tell me. 40,000. 40,000 outer column. This is the deduction under ATC and this is the only deduction under chapter 6A. If other deductions would have been there, I would have done the total of all the deductions in the first column itself and then the grand total in the outer column. Understanding what is happening? Okay, 496 minus 40 will give you 4 lakh. What is this 4,56,000? This is your total income. And on that amount only you are supposed to calculate the tax. Can you calculate the tax on this? Calculate. Nil. First 2,50,000, no tax. 2,52,000, 5 lakhs. 2,52,000 to 5 lakhs? No. 2,52,000 to 4,56,000. Meaning on 2,06,000, 5%. 10,000 and that will go in the rebate because you are a resident individual. Your total income is up to 5 lakhs. So entire tax or 12,500, whichever is lower, that you can claim as rebate. So entire amount will go for rebate, no tax payable. Understanding? So after rebate, how much is the tax? 0. 4% of that, 0. Final tax will be 0. Understanding? Will you be able to do it like this? If these kind of questions come in the exam, no, they will be coming as MCQs, case scenario. You'll have to do the calculation on the calculator and 4 options will be given. You'll have to choose the correct option. They will tell you what is the amount of total income. What is the amount of total income? 4 options will be given. This option is the correct option. They will ask you how much will be the taxable income under the head salary. 4,36,000. Correct option will be 4,36,000. How much will be the taxable amount? How much will be the taxable amount of lump sum of lump sum of UPF? How much will be the taxable amount of lump sum from UPF? 6 lakh. Remove 2,70,000. Whatever remains is taxable. Some under the head IFOS, some under the head salary. Out of 6 lakh, remove 2,70,000 because that is employees' contribution coming back. How much is remaining? That will be the taxable amount of lump sum. Some amount out of that will be taxed under the head salary, some amount will be taxed under the head IFOS. But the taxable amount of lump sum is this much only, which is there on your calculator, 3,30,000. Will you remember this? So 3 questions, 2 marks, MCQs, 6 mark case scenario. But don't worry, in the same case scenario, they will introduce 2-3 more details. Yes, and they will make the case scenario a little bit more complicated for you. And from that, they are going to give you some MCQs. Understanding or not? So this is the calculation when you do under the default tax regime or optional tax regime. If you are not following 115 BSE. Now the same question they will ask you and they will tell you calculate the total income assuming that the assessee is following 115 BSE. What will be the tax treatment? Come on, tell me. Wait. You are going to tell me. Will there be any change in the taxability of basic salary? Same. DA? Same. Lump sum tax treatment? Same. Gross taxable salary will be same. There will be a change here. Now instead of 50,000 you are going to take. So this will be 4,11,000. Your salary will change. Understanding? Will there be any effect on other sources? No. Other sources will remain same. Whether you follow 115 BSE or you don't follow 115 BSE, this amount is going to be taxable under the head IFOS. So this will remain same. So 4,11,000 plus 60 will give you 4,71,000. And my dear friends, if you follow 115 BSE, you don't get any deduction under chapter 6A. You get 80 CCD 2. You get 80 CCH 2. You get 80 JJAA, but all other deductions are ignored. Only 3 deductions you can claim under chapter 6A. Understanding? But 80C you cannot claim if you follow 115 BSE. So forget about this. 40. What was the total here? 4,71,000. That will become your total income. Now you have to be very careful that the question MCQs are asked based on 115 BSE or shifting out of 115 BSE. Understanding? Will you be able to do it? So, second part is your homework. Are you going to do it? Same, copy paste. Same, copy paste. What are you going to do? Name of the assessee. Name of the assessee, Mr. A, individual ROR, PAN, previous year assessment year, computation of total income. What are you going to write here? What are you going to write here? 115 BSE, tick mark. 115 BSE, everything same. Everything same till 4,86,000. Here the standard deduction will change. It will be 75. So this will also change. 4,11,000. IFOS will remain same. So gross total income will change to 4,71,000. And now less chapter 6A deduction, you will write nil. And you will give a note that even though deposit to PPF is there available as a deduction under ATC, will not be allowed as a deduction because chapter 6A deductions are not available, because ATC deduction is not available when the assessee follows default tax regime. That's it. So your total income will here it will be 4,71,000. Will you be able to present it? Sure. Do it positively today itself. Huh? Write down one note. Write down one note. Employees' contribution to UPF account. Employees' contributions to UPF account received as a part of lump sum on retirement rupees, fill in the blanks, 2,70,000. 2,70,000 is not treated as income, is not treated as income, and hence the same is ignored. Hence the same is ignored while computing the total income. If you forget to write this note, 1 mark will be deducted. Yes. 100%, 1 mark will be deducted. Just imagine, this is a very easy note which you can write in your own language also. Yes or no? But if you will forget, 1 mark will be gone. Even if the full question is correct, full mark should be awarded, but still you will lose 1 mark. And if you lose 1 mark, now what happens? 40 becomes 39. And 60 becomes 59. You can lose your exemption also, or if you would have got that extra mark, you would have passed also. Understanding? Should I move ahead? Question number 6. Easy? Understood everyone? Come to question number 7. In the question number 6, instead of UPF, if the provident fund was RPF, what would have been the tax treatment? Entire 6 lakh would have been fully exempt. Why, sir? Because that 6 lakh is a lump sum coming from RPF after the employment of 25 years. First question number 6, first line. Please check. You are retiring after how many years service? Meaning you have provided services for 5 years or more, and after that the lump sum is coming 6 lakh coming from RPF. Then it will be fully exempt. Understanding or not? And what effect it will make now on your answer? Pay attention. Here. Will you take this? Will you take this? Will you take this? No need to take this now. This entire thing you have to ignore. So now your gross taxable salary will be how much? Two lakh? 1,44,000 plus 36 plus 36. No need to take this. It will be 2 lakh. 2,16,000 minus 50,000. 1,66,000. IFRS will not come only. Because that entire 6 lakh is exempt. So out of that 6 lakh, this much amount will not be taxable under the head IFRS. So IFRS will not come only. IFRS nil. So what will be your GTI? 1,66,000. Out of that, will you take chapter 6 deduction? 40,000. Yes. 40,000 will come, no? Then 1,26,000 will be your final answer. If you don't follow 115 BSc. But what if you follow 115 BSc? Same. This will come. Yes or no? This will also come. This will also come. This is not going to come. So this will be 2,16,000. But instead of 50, now you will take the standard deduction of 75,000. This will be 1 lakh. So instead of 1,66,000, now it will become 1,41,000. And this will not come. Yes or no? So GTI will be 1,41,000. Getting my point? And this chapter 6 deduction will not come. So your total income will be 1,41,000. Will you be able to present the answer like that? Sure. So this is your today's homework. Huh? Present it in the same manner in which I have presented. Okay? And show me the answer tomorrow. Sure? Come to question number 8. Question number 8. Good question. Huh? Now pay attention. Mr. B is working in XYZ Limited and has given the details of his income for the previous year 25-26. You are required to compute this. Write down now. Write down. And also net taxable salary. And also the net taxable salary. Don't just calculate the gross salary, we'll calculate the net taxable salary. Final income of salary head. Yes or no? Now, basic salary. What are you going to do? Come on, tell me. 10,000 per month into 12 will be how much? This will be taxable. Then DA, 50% is for retirement benefit. 8,000 into 12 will be how much? 96,000 will be your DA. But out of that, 48,000 in terms, 48,000 not in terms. Both are taxable. Done, sir. Commission as a percentage of turnover. And how much commission is given? 0.1%. So what is the turnover? So this year the total turnover was 50 lakhs. 0.1% of that 5,000. So 5,000 will be your turnover commission. Will it be taxable? Yes. Turnover commission taxable. Bonus taxable. Gratuity taxable. Gratuity you get the exemption, no? So will you take the exemption for this gratuity? Under section, I will give you a tight slap. Gratuity is exempt only if it is received at the time of retirement. Is the question telling you that the employee is getting retired? So this gratuity is not received on retirement. This is a gratuity which you are receiving while you are in service. Fully taxable. Understanding? Next one. Now, his own contribution to RPF. So, are you contributing to your RPF? From where you will contribute? And the salary is entirely taxed. So, no need to give any separate effect to this amount under the head salary. But remember, you will claim the deduction of this amount under section 80C. So, claim this amount under 80C. That's it. Okay. Now, your employer is contributing how much? First of all, what is your basic salary? What is your basic salary? 1,20,000. 20% of that. So pay attention here. How you will present. See. Employer's contribution. Employer's contribution to RPF account. Tell me how much contribution he is doing. 20% of salary or basic salary? Specifically mentioned in the question that you have to take 20% of basic salary. So 20% of 1,20,000. 1,20,000 was the basic salary. Tell me how much. So employer is actually contributing 24,000. This is the actual amount contributed by the employer. Now you'll have to compare this amount with 12% of salary. 12% of salary means basic, DA in terms, turnover commission. There if you will take basic, no, you are gone. So now you are supposed to compare this amount with 12%. With 12% of what? Salary. Wait. Please check. Maximum contribution should be 12% of salary. Now salary. Salary means what? Basic 1,20,000. DA or DA in terms? How much is DA in terms? And do you have turnover commission also? 5,000. This is your salary. 1,73,000. 12% of that. 20,000. So employer should contribute 20,760. But how much he is actually contributing? So can I say excess contribution is happening? Excess contribution by employer to RPF account. How much? 3,240. This will be what? Taxable. Under the head income from salary. So when you are calculating your salary in your salary statement, you are writing this amount, you are writing this amount, you are writing this amount in the salary statement, you are writing this amount, you are writing this amount. But employer's contribution in excess of 12%, how much amount you are going to write? 3,240. This amount you are going to write in your salary statement. But how did you calculate that amount? Small working. You are supposed to show that working. Yes or no? And how you will show that working? In this manner. Same to same. Will you be able to do it? Yes or no? Otherwise, do one thing. See, how much is the contribution? Tell me, how much is the contribution? Out of this contribution, some contribution is exempt, no? Less. How much is exempt? Either the actual amount contributed will be exempt. Actual contribution is how much? 24,000. Either this amount will be exempt or maximum 12% of your salary, which is how much? 20,760. Whichever is. So what is the lower amount? So out of 20,000, how much? Out of 20,000, how much will be exempt? 20,760 will be exempt. And how much will be taxable? 3,240. Show this entire calculation in your salary statement as it is. No need to give a separate working note. In your salary statement only, this calculation you can show. Will you be able to do it? Actual contribution or 12%, whichever is lower. So if contribution is lower, full contribution will be exempt, nothing will be taxable. Hello sir. If 12% is lower, then 12% will be exempt and the excess contribution will arise. That excess contribution will be taxable. Understanding? So this calculation you are going to do in the first column and 3,240 you are going to write down in the outer column. Done sir? Should I move ahead? In the question, now they are saying interest accrued, ayyo, in RPF at what rate? And the interest accrued is? Sir, see now, how will you present? Interest accrued in RPF account at the rate of 13%. How much? 13,000. Yes or no? Now out of this interest, some interest will be exempt and the balance will be, excess will be taxable. Yes or no? So how will you write down? Less exempt. Less exempt. How much will be exempt? A. Actual interest accrued. That is how much? 13,000. Or B. Maximum at the rate of 9.5%. Now you have to calculate this at the rate of 9.5%. How will you calculate? 13,000 divided by 13 into 9.5. You are going to calculate like this. Yes or no? If 13,000 is credited at 13%, so how much should be credited at 9.5%? Yes or no? That will be 9,500. A or B, whichever is. Tell me. 9,500 is lower, no? So claim this as exempt out of 13,000 and the balance amount is how much? 3,500 is the excess amount, will go to the outer column. It will be taxable. This will be taxable under the head income from salary. Now on your calculator, guys, take your calculator first. Salary head, salary head. First 1,20,000 will be taxable. Then 96 will be taxable. Add 96, then 5,000 will be taxable. Add 5,000, then bonus 40,000 will be taxable. Add 40,000, then gratuity 25,000 will be taxable. Add 25,000. Wait. Don't add this 20, huh? No effect to be given under salary. Now, will you add entire employer's contribution or only 3240? So add 3240. Will you add entire interest or only 3,500? Add 3,500. On your calculator, you are getting something. What is that amount? Very difficult, no? 2,92,740 is your gross taxable salary. Are you following 115 BSc? No. So are you going to take standard deduction? 50,000. So out of that, reduce 50,000. So net salary, net taxable salary, income from salary head will be 2,42,740. If you don't follow 115 BSc. But what if you follow 115 BSc? Everything will remain same, but the standard deduction will be 75,000. And that will give you the final income 2,17,740. Will you be able to do it? Very difficult, no? This type of question they ask in the exam. For how many marks? 4 marks. 4 marks is enough, no, for this type of question. What problem? Oh, you want this question for 15 marks? 15 marks? 100 marks. Wow. Still you will be losing the marks. Question 6, 7 and 8. Done? Everyone? 9th question. Already done, no? Or to be done? 9th question is done? Forget about the 10th question right now. Because that 10th question is about that working, that formula. 17 subsection 2, clause 7, clause 7a, yes or no? That is about that part. Last lecture, if we will have time, we will discuss about that calculation, and that time I will tell you this question also. Question number 10. Yes or no? Next one. After question number 10, 11 done, 12 done, 13, 14, 15, 16, 17, 18, 19, 20, 19 is also done, 20 is also done, 21, 21 is also done, 22, 23, 24, 25, no sir, 25 is remaining, no? Let's come to question number 25. 25 is the last question if I am not wrong. 25 is the last question, no? Now before question number 25, see this is question number 25. Mark this question important, huh? Mark this question important. There is a concept of relief. Which concept? Under section 89. So that concept I will teach you. Along with that concept, this question I will solve at that time. Tomorrow only I am going to solve this. Don't worry about it. Okay. Right now come to question number 1. Test your knowledge. TYK. Question number 1 is done. 2 is done. No. How come yes? Oh, you don't want to do this question. Today we have completed medical facility, if you remember. So medical facility, taxable or exempt? Sometimes it is taxable, sometimes it is exempt. Depends that medical facility is given for treatment done in India or outside India. That we have already seen, no? So that one question we have solved, Mr. G, if you remember. Similar type of question is this. Okay. So this is for your homework. Don't worry, I am going to discuss this question tomorrow also. But if you will not do it as a homework, no, there is no point of, teaching you all. So go home and solve this question. If you are not able to solve it, then whatever mistakes you are committing, I am there. I am going to discuss this. Tomorrow you will come to know that where you are committing mistakes. But for that you have to solve it. Okay. Question number 3. We have already done it. Question number 4. Done or yet to be done? Yet to be done. Take it as a homework for today. Question number 4 also as homework. And question number 5 also as homework. Don't worry, all these questions will be discussed tomorrow. But you are supposed to solve these questions at home today. Done now? 6 is done. 7? 7 is done. 7 and 8 are remaining, no? So tomorrow we are going to finally discuss all these questions and this chapter will be freezed. Already this chapter is freezed. Entire discussion is done. Now whatever we have studied, from those things, how the questions are framed in the exam. Okay? Those types of questions are remaining. And tomorrow we are going to solve all these questions. Automatically you will get what? Confidence in this topic. Okay? And few extra questions I am going to give you. So tomorrow I am going to give you questions from chapter number 1. Introduction. Tax calculations. Yes or no? Chapter number 2. Residential status and scope of total income. Chapter number 3. House property. And this chapter number 4, which we have completed today. Salaries. Extra questions for your practice I am going to give you tomorrow. Okay? Now, wait, 1 minute. Why I would give those extra questions to you? And you will take those questions and keep those questions at home, no? Or you will do the practice. So I will give you some time. Within that time, all the extra questions which I am giving you must be solved. Huh? And if you will do it now, what will happen? See, selected questions are there from past year exam questions, MTPs are there, RTP questions are there, and which are good questions which are going to give you practice for those topics. Understanding? So my reason for giving you those extra questions is that only, that you practice those questions, commit mistakes. And commit mistakes in the class and learn. So that you don't commit those mistakes in the examination. Getting my point? So tomorrow we are meeting, we are going to wind up this thing finally, and we are going to start with the new chapter. PGBP. One of the most important topics. How much is the weightage in the exam for PGBP, you know? 15 to 20 marks minimum. So out of 50 marks of your direct tax, 20 marks is for PGBP. Miss that chapter and you will see September. May students and September students will see January. See you all. Bye bye. Bye.